Hi everyone, in today's session, we are focusing exclusively on the DXY, US dollar index. We are analyzing the weekly chart to build a long-term view and anticipate where price is likely to go. It's crucial to be aware of the upcoming high-impact events, the FOMC meeting this week and the CPI release the following week. We must respect that this news can create sudden high volatility that may temporarily disrupt our technical outlook. My overall bias remains for a long-term buy on the DXY. However, the market is in a clear consolidation phase. What we are likely seeing here is a process of accumulation where the market is building energy for its next major move. This type of price action is designed to create doubt and confusion. And I'll be honest, even I have some uncertainty about the exact timing for when price will finally commit to the next upside. Despite the uncertainty, my bullish thesis is grounded in what I believe are the two most powerful drivers of price: liquidity and imbalances. These are the foundational forces that create significant moves, and they are the key reasons why I remain that price will ultimately move higher. Um, Here is the technical evidence supporting the long-term buy view within this consolidation. Right? You look at this weekly time frame, you can see that price took out this, inducing sellers to go below. Look at the state of that rejection. You understand? Rejection of lower prices. If you look closely at this weekly chart, you can see that every attempt to move lower is being aggressively bought. This is your thesis here. This is your evidence here. This is visibly demonstrated by the consistent lower wicks on the candles. These wicks are clear signs of rejection at lower levels, indicating that buyers are actively stepping in and defending the downside move. This battle creates the imbalance which we watch, as you see this imbalance here, which we watch for. The constant rejection of the downside move suggests that the underlying liquidity below the consolidation is being taken, setting the stage for a potential upward breakout. Understand? There was a rejection here, so I'm anticipating that price could possibly trade into this daily order block. I'm not one to trade these type of order blocks. Why? Because there is also liquidity below it, and if you look at the premium and discount, it's not trading from the optimal trade entry. Yeah, I did mention that we are not seeking for perfection, but how I trade is I always look for an entry on the optimal trade entry or below, never above. Does it make sense? So you could ultimately expect price to go into, I'm not marking this correctly, into this order block, if you want to call it that. But if we are being honest, this is one order block as well. This is an order block altogether. Doesn't make any sense. And you can see that price previously traded into it, making it extremely weak for it to hold price if price does get there. Hence, I'm just gonna focus on this daily one, expecting price to come, take out this buy side liquidity, trade off of this order block, and move up to take out this buy side liquidity and eventually this short term high. Now let's drop down to the 4-hour time frame to fine tune our perspective. Here we can identify a significant volume imbalance. Let me try and point it out for you guys. A significant volume imbalance, which is on the 4-hour time frame. As you can see it, this is our volume imbalance. These zones have the ultimate power to act as a magnet for price, often causing a reversal or a strong reaction. Given my short-term perspective is for price to drop into the 4-hour volume imbalance, this move would be a necessary step to fuel up and gather energy, preparing for the larger upward move we anticipate on the weekly chart. The ultimate goal of that larger move is to sweep the buy-side liquidity here, resting above the recent short-term high, which is up there. However, it is crucial to note that price is not obligated to trade into our specific 4-hour imbalance. So we are going to drop down into the 1-hour time frame, where we are going to see that there is another volume imbalance, understand, whereby change of characters or market structure shifts have already happened. So we are going to try and mark it for you. I'm going to mark it for you guys. So there you go. This is a volume imbalance. You might say it has already been violated or covered. Yes, you would be right and you wouldn't be wrong. Hence, my stance is still on the 4-hour one. But this one can also hold price, which I have back tested, and I know that these volume imbalances have the power to reverse price. Price could choose a different path. In fact, looking at the 1-hour time frame, as I've already stated, we see price is currently moving down and may target a different volume imbalance around the 98.250, which is here, 98.250, somewhere here. Level. It could very well find its buy trigger from that lower level instead. So for now, we must hold our core long-term buy bias loosely and manage the short term by respecting these key levels, and most importantly, by accounting for the upcoming news events. To bring it all together, on the weekly chart, the structure points to a long-term buy, with the consolidation and constant rejection shown by the wicks, signaling underlying strength. Drilling into the 4-hour and 1-hour time frames, we see the immediate path may be lower. A price seeks out a volume imbalance, whether it's the one we initially identified on the 4-hour time frame, or the one at the 98.25 level on the 1-hour time frame. This potential drop is not a sign of weakness, but rather a potential setup, gathering the necessary liquidity to fuel the next leg up. The key takeaways is this: our primary direction is up, but the path is dictated by these imbalances. We must navigate the short-term noise from the FOMC and CPI news, using any dip towards these key zones as a potential opportunity in line with the broader long-term bullish outlook. That's all for this analysis. Please leave your thoughts in the comments below. And if you have found this useful, don't forget to like and subscribe. I'll see you in the next video.